Welcome back to Market Brief After Hours. We've just wrapped up an absolutely historic day on Wall Street, and there is a massive amount of ground to cover. From a jaw-dropping debut in the space sector to some serious shifts in global markets and foreign exchange, it's been a wild ride. Let's start with the big picture. How did the major U.S. indexes wrap up the week?
It was a highly positive finish on Friday. Investors were really buoyed by a mix of massive corporate news and some easing geopolitical tensions. To give you the exact numbers, the S&P 500 closed up 0.5% at 7,431, while the Nasdaq Composite added 0.31% to finish the session at 25,889. Over on the blue chip side, the Dow Jones Industrial Average advanced a solid 354 points, or 0.7%, settling at 51,202.
And the undisputed star of the show today was SpaceX. This wasn't just a normal IPO. This was a historic moment for Wall Street. Walk us through the sheer scale of this debut.
Historic is almost an understatement. This was the world's biggest initial public offering, with SpaceX raising a staggering $75 billion. The debut valued Elon Musk's AI to rockets group at more than $2 trillion. The shares listed on Thursday evening at $135, and by the close on Friday, they had popped by a fifth, ending at $161.11 each. The trading volume was just massive, with about $80 billion worth of shares changing hands.
Unbelievable! And this has some historic personal implications for Elon Musk as well, doesn't it?
It absolutely does. This share price pop has officially made him the world's first trillionaire. His 42% stake in SpaceX is now worth more than $800 billion. When you combine that with his $280 billion holding in Tesla, his total wealth comfortably surpasses the $1 trillion mark.
$1 trillion is a number that is hard to even comprehend. How did the rest of the market react to this massive influx of capital?
It really boosted broader investor confidence. There's a growing sentiment on Wall Street that other stocks might actually be undervalued because of how much excitement this generated. But it did create a bit of a mixed day for the rest of the tech trade. For instance, Nvidia finished only marginally higher, Advanced Micro Devices jumped a strong 4.7%, and Alphabet rose 0.5%. On the flip side, we saw some big names like Broadcom, Palantir, Amazon, and Meta all closing in the red. It seems so much capital is flowing to a select few companies right now that some other major players are taking a back seat.
Right, a bit of a vacuum effect. Now, let's look across the Atlantic. European markets seem to have an incredibly strong session on Friday. What was driving that optimism?
Europe was highly buoyed by hopes of a potential peace agreement between the U.S. and Iran, especially after U.S. President Donald Trump called off planned military strikes. The Pan-European Stoxx 600 climbed 1.88%. Looking at individual countries, the UK's FTSE 100 moved up 1.63%. Germany's DAX gained 1.76%, and France's CAC 40 advanced 1.83%. Switzerland's SMI also enjoyed a 1.32% lift.
Even with those strong market gains, we did get some mixed economic data out of Europe, particularly from the UK and Germany. What did those reports show?
Well, the UK economy actually contracted in April. Real GDP fell by 0.1%, which was a contrast to the 0.3% expansion we saw in March. It was the first monthly fall since August 2025, driven mostly by a 0.2% decline in services, though manufacturing did beat expectations by rising 0.4%. Meanwhile, in Germany, annual inflation eased to 2.6% in May from a two-year high of 2.9% in April, which brought some relief. France, however, saw its inflation rate tick up to 2.4% from 2.2%, mostly due to a rebound in gas prices. And Portugal's inflation held steady at a relatively high 3.3%, heavily impacted by energy costs.
Fascinating. And the rally wasn't just confined to Europe. Asian markets also posted some spectacular gains.
Yes, it was a sea of green in Asia on Friday. In China, the Shanghai Composite rallied 1.12% to close at 4,031, led by a rebound in e-commerce. Hong Kong's Hang Seng Index jumped 1.93% to 24,718.10, recovering from an 11-month low. But the real standout was Japan. The Nikkei average surged over 4% at one point, before closing up 2.81% at 66,020. Interestingly, memory chip maker Kioxia Holdings surged 7.6%, officially replacing Toyota Motor as Japan's largest company by market capitalization. Over in South Korea, the Kospi Index surged 4.63% to 8,123, with Samsung Electronics soaring 7.9% as foreign investors turn buyers again. Australia's S&P ASX 200 also climbed 1.98% to hit a one-week high at 8,804.
We are going to take a very quick break, but when we get back, we will dive into U.S. consumer sentiment, the bond market, some critical technical setups in Forex, and the individual stock movers you need to know. Stay tuned. Welcome back to Market Brief After Hours. Let's shift our focus to the macroeconomic picture in the U.S. We received some fresh consumer sentiment data on Friday that turned some heads. What were the key findings there?
We saw a much bigger than expected rebound in U.S. consumer sentiment for June, largely because consumers felt some relief from easing gasoline prices early in the month. The University of Michigan's Consumer Sentiment Index jumped to 48.9, up from 44.8 in May. Economists had only expected a reading of 46.0. This is a significant bounce back, especially considering the index had recently hit its lowest level on records dating back to 1952. The Expectations Index also shot up to 49.3 from 44.1.
That's a notable recovery. But at the same time, we saw Treasury yields moving higher. What's going on in the bond market?
Treasury yields edged up as investors digested some hotter-than-expected wholesale inflation data. The Producer Price Index, or PPI, rose 1.1% in May, pushing the annual rate to 6.5%. Economists had only expected a 0.7% monthly print. Because of this, the 10-year Treasury yield rose to 4.483%, the short-term 2-year yield edged up to 4.087%, and the 30-year yield advanced to 4.972%. On the commodities front, oil prices fell on hopes of a resolution to the Middle East tensions, with U.S. crude falling 3.2% to close at $84.88 per barrel, and Brent crude dropping 3.4% to settle at $87.33.
Let's transition into the foreign exchange market, where we are seeing some really defined technical trends. Let's start with the euro and the pound.
The Euro-USD pair closed slightly lower at 1.1570, down 0.07%, trading in a tight range between 1.1557 and 1.1589. Technically, the euro is in a firmly established bearish bias. It's trading well below its key moving averages, with the 50-day simple moving average at 1.1671, the 100-day at 1.1687, and the 200-day at 1.1676. If it breaks below the recent low of 1.1557, we could see a deeper drop toward the psychological 1.1500 level. As for the pound, GBP USD closed nearly flat at 1.3410, down 0.04%. It's currently battling right at its 200-day moving average of 1.3419, while remaining below its 50-day average of 1.3468 and 100-day average of 1.3471. There's a lot of indecision here, with immediate support at 1.3383.
And what about the US dollar against the Canadian dollar and the Japanese yen? Those pairs seem to have some incredibly strong momentum.
Absolutely. USD CAD is showing powerful upward momentum, closing up 0.11% at 1.3981, very close to its session high of 1.3995. The pair is trading substantially above all its major moving averages. The 50-day is at 1.3765, the 100-day is at 1.3726, and the 200-day is at 1.3816. This is a very constructive bullish trajectory, as it eyes the major 1.4000 threshold. Meanwhile, USD JPY rose 0.21% to close at 160.20, creeping closer to its recent cycle highs. It remains well supported above its 50-day average of 158.94, 100-day of 157.84, and 200-day of 155.66. The bias is resolutely bullish here, with buyers stepping in on any minor dips.
Before we move to individual stocks, let's look at precious metals. Gold and silver have had a rough ride lately. Did we see any relief on Friday?
Gold is trying to find a floor after a massive sell-off. It closed down just 0.06% at $4,210, trading between $41.70 and $42.46. But the medium-term picture is still deeply bearish. It's trading way below its key moving averages. The 50-day is at 45.88, the 100-day is at 47.70, and the 200-day is at 44.23. Silver, on the other hand, managed a modest recovery, closing up 0.73% at $67.84. Crucially, it managed to close just above its 200-day moving average of $67.54, though it's still trailing far below its 50-day of $75.41 and 100-day of $79.52.
To wrap things up, let's talk about some of the individual corporate market movers. There was a big executive departure that shook up the software space, right?
Yes, Adobe fell more than 6% after Chief Financial Officer announced he will be leaving the company on June 15th. This follows news earlier this year that Adobe CEO is also resigning, which naturally created some unease and dragged down other software stocks. Interestingly, we also saw other space-related stocks slide on Friday, reversing their earlier gains despite the massive SpaceX debut. Rocket Lab lost more than 10%, AST SpaceMobile dropped 15%, and Redwire fell 11%.
That's a classic sell the news reaction for the rest of the space sector. But there was some positive news for a few tech companies joining a major index.
Yes, the Nasdaq announced its quarterly rebalance, effective June 22nd, adding 5 new companies to the Nasdaq 100. CoreWeave stock jumped 5% on the news. Nebulous Group and Teradyne both advanced close to 5%, and Astera Labs ended flat. Interestingly, Rocket Lab is also slated to join the index, which might give them some medium-term support despite Friday's sell-off.
That's all for today's episode of Market Brief After Hours. If you find this useful, please follow Market Brief After Hours. Have a great weekend, and we'll see you next week.